Hello traders. Welcome to our video on Ultra Investor Price Action Trading Techniques. This approach involves using market structure and candlestick formations to identify high probability trading setups, which is a simple and profitable way to trade. In this episode, we will demonstrate how you can easily find high probability trading setups by combining market structure and price action entries, which is one of our preferred methods to trade. If you are interested in this topic, please show your support by clicking the like and subscribe button. Firstly, we will discuss the trend and structure levels. Consider an uptrend with a series of higher highs and higher lows. The highs and lows in this scenario will form market structure levels that the price can potentially react to when it returns to them. Traders often construct their trading plans around these levels, but we have found that by adding several criteria and conditions to these levels, they can become a perfect high-probability trading setup. For instance, if the previous level of structure lines up with the 618 Fibonacci retracement level, it can increase the accuracy of the trading strategy. Let's now move on to the major levels of structure. Imagine the market makes a move that has multiple rejections and acts as both support and resistance, and was recently respected. This level is what we refer to as a major level of structure and can produce some of the most accurate trading entries. Now that you have an understanding of trends and major levels of structures, we will provide some examples. On the Euro-Dollar 4-hour time frame, we can see that the level is a major level of structure with multiple rejections, acted as both support and resistance, and was recently respected. We simply need to wait for an entry reason here, such as a candlestick formation or a chart pattern like a double bottom in lower time frames. In this case, we zoomed in on the 1-hour time frame and found a clear bearish engulfing candlestick, which is our entry reason for going short. Another example is on the Aussie dollar with the same concept. We can see a fresh major level of structure, and there is a bearish trend line. We just need to wait for an entry reason in lower time frames when the price reaches this area to go long. Once again, we zoomed in on the 1-hour time frame and identified a bullish engulfing candlestick, which is our entry reason for going long. Remember that even with these techniques, no strategy works all the time, and you may experience losses. The key to trading success is emotional discipline, not intelligence. So, stay disciplined and adhere to the rules of your trading plan. To recap, a major level of structure is a level that has been respected multiple times as support and resistance. Combining a major level of structure with price action techniques such as retracement levels, chart patterns, or candlestick patterns can provide a solid trading strategy. We hope this video has been helpful to you. If it has, please like and subscribe to help us continue producing more videos like this.